And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, February the 25th, everyone. I'm John Hoagland. Thanks for trusting me with your time this morning. Yes, it is Friday, the last day to write in our weekly chapter of our year-long book of trading. Hopefully, if you're in the markets, things going your way already. As usual, we're seeking accurate context, good risk management, and patience. It always seems to be more and more challenging to do that, and these markets are always providing opportunity and the opportunity for us to be challenged and to continue to learn. As always, I ask everybody to pray for peace, and it's a terrible thing that's going on over there in Ukraine. It doesn't seem like it should be happening here in 2022. This morning, the economic numbers, 7:30, the durable goods numbers came out. They were higher by twice what they were expecting. So we're obviously still in need of durable goods, of course. Personal income and spending. Personal income was flat. Spending was higher, indicating we're probably paying more for the products that we are buying. Inflation is still a problem. 9 o'clock this morning, we're looking for the Michigan Consumer Sentiment and pending home sales still due out this morning. So yesterday, new sanctions on Russia were apparently applauded by investors yesterday. Stocks pulled out of a deep hole. Russia, however, seems unfazed and continues to advance on the capital of Ukraine, Kyiv. Stocks are set to open higher early today with eyes on those economic releases and what they may mean to Fed policy. And we're about 3 weeks, it's 2 weeks from next Wednesday is the next FOMC meeting. So we've got a little bit of time. As Bullard mentioned, there's always the possibility of a rate adjustment between meetings. I don't think that's going to happen now. Lots of people speculating that the rate change may go from 50 basis points to 25 basis points due to everything else that's going on. Crude prices sit $7 off yesterday's highs near the $93 inflection level, being another interesting day in that market. And all of this and that activity yesterday, and it seems every time I kind of capitulate and say, okay, maybe this thing is going to roll over and head lower, it surprises me. And it reminds me of how resilient these markets really are. And I can still hear in my dad's voice him saying, well, the market always looks the best at the top and the worst at the bottom. So we got to trade what we see, protect ourselves, always wear a stop, and look for those opportunities to limit risk. That's our job. Number one, risk limiter. Be a good risk manager. As always, make sure you like, share, comment, question, feedback, heckling, and love are always welcome here at the Market Forecast. Subscribe to our YouTube channel. You get notifications when we do go live. The VIX down 3% this morning off its close yesterday. 29.32, back down below that 30 level. Dollar index off slightly, 96.86. And the yield on the 10-year back up at 2%. Pretty good jump yesterday in rates. I'm going to say good morning to everyone, as always. My folks, Denny Z, good morning to you. You're first in the room. You win the prize. Theo, good morning. Zerain, Isaac, Mirik, Tachyon. Spencer, good morning. Scott saw and he conquered. Marcelo, good morning. Ronald, Deanna, good morning. Jay Crockett, Vince, my guy, good morning. Brian, Sarah Hall, good dawn to you as well. Luis, Rick Hoagland, yes, thank goodness it's Friday. Yes. Terry King, Dr. VJ, good morning. Expediter, Mustafa, Chris, Laura, good morning. Chris, Jay Lee, Short Russa, that's the best we can do as traders, right? Jay, good morning, everyone. I see the praying hands, and thank you all for continuing to pray. Alfred, Brett, Oli, Tova, Andre, Max, Shaw, good morning. Amanda, good morning. Shaw with some ideas on those sanctions. Don't seem to be causing any problems here for Russia here just yet. Denny Z, Eric, good morning. Spencer, Thomas, Joe, Devant, Robert S, Dead Letter Opener and Trading Research, and Mom. Hi, Mom. I just got word that you're watching again today, so everybody be cool. My mom's watching. All right. I think we've pretty much taken care of everything. I've mentioned a couple of times that we're going to be starting something that we're going to call Make Hogue Money. I'm going to tell you a little bit more about it after we get through the charts here this morning. I think it's going to be interesting and fun for everyone. It's just a pilot program, and we're going to be seeking your feedback and ideas on how to improve it as it goes along. So let's take a look into the charts now. We've got some late spikes that occurred yesterday. There are going to be some interesting opportunities for us early in the sessions today. Let's go ahead and take a look, make sure I'm set up. We'll start with the E-mini S&Ps, and then we'll go to Crude and see the open there. So let's take a look. All right. Get my handy dandy notes here. All right. So what are we looking at on the daily chart here? The downside structure still appears to be intact. We've got lower highs, we've got lower lows, some pretty swift and deep rejection or excess on that low yesterday. Just about the time I'm thinking, okay, maybe we're in real trouble, it seems to re-correct itself, and we saw a really deep pullback off that low from yesterday. We added 4,200 estimated open interest. And volume, really good. Haven't seen that volume in a while, and it's usually going to be on a down day. But if you notice, the last time we had rejection of this magnitude was the highest volume that we've had since this became the front month. Excuse me, I apologize. So what are we looking at? Well, we're looking at a weekly kickoff low being pivotal again. We had this area of rejection. We had this area of rejection. We've accepted to one degree the price being lower below weekly kickoff low. We actually ended up closing the market 1.4 ticks above weekly kickoff low. Settlement 42.84, weekly kickoff low 42.83. How I do those things? So always interesting to see our opportunities in and around those levels. So I'm looking at that as a somewhat pivotal level today. The settlement price from last night as well as weekly kickoff low. Now, gets more interesting. We have a late spike. In other words, all that upside movement yesterday created a big bar that never had the time in regular trading hours to show acceptance of time and price over time, I should say. So that puts up this late spike. Now, the base of this late spike is 42.52, basically. 42.52. It's when the market really started to accelerate. But there's kind of two bases to this. And we're going to see this in crude as well. So we've got the base where the market really started to accelerate to the upside, which we're going to be calling 42.17. And then we've got our true base down here again at 42.52. The spike rules say if we open inside or above a late spike, it's the market marking acceptance of higher price. You can see settlement right here, this blue line that's right on top of weekly kickoff high. So one of the most important levels that I'll be watching for this morning is if we get a return back to settlement and weekly kickoff low, which is what that is. Yes, 42.83. I'm going to be looking for the market to hold that level. Now, everything that we look at on these charts, every level that we look at is more of a range. There's nothing that is finite and exact in futures trading. So this will give us an opportunity, perhaps, to allow us to limit risk. And again, that's job number one. It's the only thing we can control is our risk. Sometimes we get a little crazy and we lose that idea of how important risk can be. And we overtrade, we get mad, we start grasping at straws, and that's never a good idea. When you start to feel that way, you're better off walking away or taking the battery out of your mouse and getting yourself calmed down before returning back into the marketplace. All right, so we're still news driven. There's still all kinds of uncertainties out there. I'm never surprised, but sometimes amazed at the resilience of these markets. We have to see how things continue to play out. Trade what you see. We've got late spike opportunities, and these are among my favorite days because you get some pretty defined levels with which to look for opportunities. They're not always winning days, not always winning trades, but it just increases the probability of an understanding of how the market is likely to move throughout the day. All right, let's watch the open here in crude oil. News-driven market meets auction process. We've been talking for a couple of weeks how the auction process to the upside has been suffering and how the market is going to need new business to the upside with which to continue this move. Now, yesterday, we had a big move in the overnight session that took us up to $100. As the day went on, price just continued to whittle away and ended up closing at 92.81. 92.81, 93 is weekly kickoff high. So we never did see a close above that level. Now we've got another situation where there is a late spike. Late spike to the downside. Again, kind of a two-tiered late spike. May not necessarily matter. Here's our settlement. Here's weekly kickoff high. The market pushed down just enough to close down below that level. We have yet to see a close above that level. So this is all smacking of rejection. Now, when we look at the delta continues to push lower throughout the day. That is congruent with direction and may indicate that when we opened yesterday, we brought in sellers that accumulated 30,000 new contracts in open interest. We knew we had a lot of overnight longs in this market. Settlement from the day before up here. This was all overnight weaker hands traders. The market turned and came right back by the end of this session, extended trading hour session, back to settlement. But with the increase in open interest, that is a bet to the short side. Who would be betting to the short side? Is this longer, stronger money? The market price direction was congruent with delta. More aggressive sellers throughout the day pushed price lower. I would say that this was probably all time frames acting in concert. Our overnight longs started the fire. We probably brought in some bigger speculators and some longer time frame traders on this move to the downside, and we can see that because of the large increase in open interest. So the late spike, there's two bases I'm saying to this late spike. It's the late spike here on the 1 o'clock bar. Okay, so that where it broke out was 93.41. So that's going to be our base one of our late spike. The other late spike is all the way up here, 95.32, because that's where the market had tried to find balance and sellers continued to press into this market. So there's really two kind of bases. Is it going to matter? Not only do we have a late spike, now we have an opening gap. Opening in or below the late spike marks acceptance of price. Just like the S&Ps in the opposite direction, we get an opportunity to trade back to settlement / weekly kickoff high. That could be a good risk limiter for us. Always be thinking about where the market is proving you wrong, and these important inflection levels can be among the best levels. We didn't watch the open here. We got a little bit long-winded. Here's the opening range. We're still in it, so we haven't really missed anything. 59 to 93, we're looking at a relatively large opening range. We're looking at 34 ticks. We're right in the middle of it. We haven't traded outside either side of it. We are opening out of balance. Okay, we're opening with a gap. That means we're opening out of balance. We have some overnight shorts in this market. The inventory, as we look at the 30-minute chart, settlements here, we got too long. We maybe have some recent shorts in this market, but again, we've opened with a gap. That opening range remains the high of the session after a late spike and an opening gap to the downside. It might be a pretty decent opportunity, although it's a little rich for my blood, but I can't do anything until we get an opportunity to extend outside the opening range. And there we go. All right, so we've looked above the opening range. The opposite has occurred, so that gives us possibly the opportunity to be patient and wait for better trade location as the day continues to move higher on a gap close, on settlement, on weekly kickoff high. Okay, is there confidence in that direction? Doesn't act like it here, just in a very short time frame. Okay, starting to get a little bit of a creep to the upside, but not all that interested in this opening range trade here in crude just yet. All right, the Nasdaq. Very similar, of course, similar but different. We still have downside structure. We've rejected below 20% level here. We've rejected below weekly kickoff low here. We lost 3,800 in open interest. I find that very interesting. After the S&Ps added 4,200 in open interest, we lost open interest in the Nasdaq. But the Nasdaq has been presenting itself as much weaker. We're at the 20% correction level here. It's a deeper rejection of lower pricing. Last night, the S&Ps closed 1 point above weekly kickoff low. Nasdaq went a lot further than that. Strong volume and the S&Ps and the open interest, but they open it on the volume in both the Nasdaq and the S&P. But then the open interest is very suspect to me here in the Nasdaq. Doesn't mean it's not a good opportunity day, because again, we have another spike. Spike rules. We open in or above the late spike. We look to go with that move. It's accepting of price at a higher level when the late spike is to the upside. It's the opposite, of course, when it's to the downside. Yesterday, lots of deep overnight shorts. The market opens, leaves the opening range at the low of the session, which I forgot to mention in the S&Ps. It also left it at the low of the session. Back to settlement. Okay, that's overnight adjustment. The president starts talking about the sanctions, and we continue to the upside. So we are going to be opening in or above the late spike with a pretty high degree of probability. Overnight inventory was to the short side. That's now been reconciled. Settlements up here, 13,966.50. And the weekly kickoff low is certainly a potential in play, because this is, kind of a 2 or 3 tiered late spike. We've got the late spike, which is right here, the base of the late spike. 13,754. And then we've got, the basically the weekly kickoff low. The market tested up to this level, had an inside bar, and then broke out above that level. So there was a little stutter step where the market kind of tested and failed above weekly kickoff low, and then found its way above. So when it's resistant on the way up, sometimes it's supportive on the way down. Not everybody cottons to that, of course. There's always a million ways to skin a cat. Always just an interesting thing to be thinking about. If we can't close the gap here with the late spike, we're going to be looking for this market to continue this move to the upside. Again, always the caveat, especially these days, the markets are so news driven that just about anything can certainly knock these markets around, as we saw yesterday. Gold. Well, I would say we've got some very disillusioned longs. Okay, we know that there's been an increase in open interest just about on a daily basis with delta divergence. So our more aggressive short time frame traders have been meeting longer time frame bigger buyers all the way up. We had our big spike to the upside yesterday, rejected by the end of the session. 1926.30 is weekly kickoff high, is settlement price. So we did close above it, and then we faded after the close, which also brought forth what I'm calling a late spike, and looks like we're going to be opening where we did open below, and we'll see what happens here in just a second on the 30-minute chart. Delta divergence, however, has ended. While we range here, Delta has stopped being very directional on the day time frame. Here's the 30-minute chart. So here's the overnight. The market opens. Where does it go back to? A weekly kickoff low. Settlement, again, up here. We did close above it. And we do have a late spike. Now, this late spike appears to have happened after the regular trading hour close. But with the amount of volume that was still present there, I believe that makes it important. So the market has opened in the late spike and is continuing to push to the downside. We've got a old gap that remains here that is yet to be checked, and here's the gap, and there's always the naked points of control down below that the market may try and target. We've got overnight low, which is basically right where we are right now. Going to be looking for opportunities to find chances to sell strength here, but the base of the late spike is basically weekly kickoff high. It's going to be a tough trade today, I think, in gold. I'm probably going to back burner it unless I see an opportunity at weekly kickoff high, or unless we really start to head to the downside. I'll see if we can check these 2 points of control down here, see if we can close this gap, and then I'd look for opportunities for potential longs. No, it's blurry. We added 1,400 in open interest on the way off the highs yesterday. Lots of positive delta on the negative delta. Everything has been congruent as far as price and delta is concerned. So it makes the direction of the open interest a little bit blurry for us yesterday. Overall, we know that we've seen some pretty decent increases in open interest, negative delta on positive price movement. Longer time frame buyers, they got to be getting nervous. Okay, I'm going to go back and talk a little bit about the late spike here, Jake. Okay, so this is the regular trading hour session from gold yesterday. Gold closes at 12:30, but after that regular trading hour close, the market dove to the downside on some pretty decent volume. So that's going to create what we call a late spike. The market moved lower, but didn't have enough time to accept price at that level during its regular trading hour session. We see it here also in the S&Ps. Okay, here we have a late spike in the opposite direction. This move up to settlement was the last 30 minutes. It closed at the high. So this creates our late spike, which is, again, price moving higher, but without the opportunity to accept that price in the regular trading hour session. When we open inside the late spike in regular trading hour session or above it, it marks a possible acceptance of higher prices. So it doesn't mean we can just jump in and buy it. We have to look for good trade location. And if we get the opportunity up here near weekly kickoff low settlement, the high from the late spike from yesterday, this could be a nice opportunity. But the late spike doesn't fail until we accept below the late spike. So technically, we could pull all the way back down to the base of the late spike, which is, again, approximately right here at 42.52, before really deciding that this market is not accepting higher pricing. And again, Jake, this is it is a probability play. The probabilities are greater when we open in or above a late spike for continuation to the upside, but there's no guarantees on anything. So that's kind of the late spike and the rules around the late spike. Let's take a look at the euro, which is still kind of suffering and hard to read. State change, possible market state change. We were range bound. We have a potential continuation to the downside, but it brings a little bit of volume yesterday, but no open interest. We lost open interest. So maybe some of the longs that were holding near this weekly kickoff low capitulated as we moved down through that level yesterday. I'm going to be looking for the weekly kickoff low up here as for resistance. 112.59 is that number. This is the weekly chart, and we've broken out of an area of previous balance, an area of balance. We're going to look for opportunities to sell this market on strength unless we reaccept back above weekly kickoff low. Okay, so here's our move. We got a big gap that's remained. We passed right past a couple of naked points of control. This one we tested too, so I'm going to get rid of this one. Get rid of that. That's already done. So no true late spike here. The market looked lower, turned around when everything else did, and settled up near the high of the session. We've opened with a gap. Are we going to come and close the gap? That's really the question. That gap can be supportive, and acceptance below and acceptance back inside the range from yesterday can also indicate a failure to continue this upside auction and a move perhaps to the downside. You're welcome, Jake. Take a look at the last two of our products here, the 10-year and nat gas. Our treasuries, by the way, have rolled into the June contract. I'm always happy to see the June contract coming around because it means summer is on the way. Open interest has been blurred by rollover. Yesterday, it indicates we lost 144,000 contracts over all of the contracts in the 10-year. That's more of a function of rollover than it is anything else, and it's going to make, until expiration, until we really get through this rollover, probably by early next week, we'll be able to depend more on some of the open interest. It's still in balance. It's still in short time frame control. Here's the 30-minute chart on the 10-year. So had a big up move, holding a lot of overnight longs, unable to hold price above weekly kickoff high, comes all the way back to where? Settlement. Even on these big days, overnight inventory can really be helpful. Where are we now? Well, we've got some recent overnight shorts. The market is trying to test back to the gap. Gap rules are in play. If we can't close the gap relatively early, we'll look for opportunities to sell this market in strength. Trying to think of what else here. Just kind of basing the ideas of trade today off of the fact that we've got a gap, and if we can't close that gap, we'll look for opportunities as the day goes on to find good trade location in the short side. And for the natural gas, well, like everything yesterday, the early auctions were all refuted and show excess at the high. We see excess at the high here. We added 11,000 in open interest yesterday on that pullback off the high. Is this new sellers coming in, and how can we see that? So swift rejection, big excess above weekly kickoff high. Weekly kickoff high is going to be pivotal. Here's the nat gas, the 30-minute. All of that overnight inventory took us right back down. Is this the right chart? Was I on the wrong chart for? No, we're right. So much overnight inventory adjustment yesterday. It looks like I'm looking at the same chart. All the overnight longs capitulated. Settled it back down below weekly kickoff high. 464 is settlement. 465 is weekly kickoff high. It's amazing how visual markets are and so how these things sometimes happen. So what do we think about the open interest when we see the price moving lower and we see delta congruent with price? So in other words, price moved lower over the session, delta moved increasingly negative. All trades, all time frames acting in concert, longer time frame sellers coming in and knocking this market back down. We've got a gap. We have not yet been able to close the gap, and if we can't close the gap relatively early, we're going to be looking for opportunities to short this market against good levels for risk management. Casey, there's no indicator for open interest. It's nothing that can be tracked even intraday. Open interest is calculated by the exchange, and you don't get the actual numbers until after 9 o'clock the following day. Here is what we are looking at. So this is where I collect the information. This is right off the CME website. I'm going to put the link into the chat here so you can bookmark that for yourself, and you can always check open interest. So let's say, for example, I want to see what the open interest and volume and everything was in the S&Ps yesterday. This is going to show a preliminary number. Okay, make sure you always check the date. This is yesterday's information. This is the preliminary. So we're going to make this real big. So here is the total volume of trades cleared. Almost 3 million yesterday in the S&Ps. Pretty big volume. Here's the open interest. And I always collect all of the open interest, the total of the S&P's futures. We've got over 2 million in open interest, and we added approximately 4,200. Just after 9 o'clock, if I go and refresh this, it's going to come back and it's going to say final. And that's going to be the real numbers. The only thing that's likely to change is going to be the open interest, because it takes time to compile that information by the exchange. Now, here's why I collect all of the information. This is the crude oil. Okay, we have 10 years, just about 9 years of contracts, and some of them are very actively traded and have a lot of open interest. Okay, we have March here. That's the most open interest, 346,000. We got 229,000, 211,000. There's open interest for years in crude oil. So if I'm only focusing on the open interest on the front month, I'm missing some of the information. The front month, we lost 288 yesterday, approximately. But overall, we added almost 30,000 contracts. That means something. So I'm always checking these in the morning. I collect the information, and I compare it with overall value direction. I look at it with delta. I look at it with open interest. I look at it with volume, and all of this helps create that holistic view of the marketplace that I hope helps you in your trading, and hopefully, of course, helps me. Yes, lots of hedging in crude. All right, we're getting a little bit long-winded here. Hang on a second. Okay, so next Thursday, right after the market forecast at 8:25, I'm going to put a Zoom link into the chat here in the market forecast. We're going to make Hogue money. We're going to get in and we're going to take 5 minutes to kind of think about what we're thinking about the S&Ps. I'm probably going to pick a few random people, and they're going to be able to speak out loud. So please be respectful and watch your language. Mom's watching. And we're going to take a look at the S&Ps, and we're going to collectively decide if there's a trade on the open or not. We're going to watch. We're going to take that trade, and we're going to see what happens. If there's no opportunity on the open, we're going to discuss where is our next opportunity. We're going to try and kind of hive decide the trades. The people that have the ability to speak are going to talk their case. Everybody that's in the room, I think we're going to find a way to let you say yay or nay to a trade. Now, this may slow the process down a little bit, but I think it's going to be a lot of fun. Initially, I'm just going to do this in sim, but we're looking for your feedback and ideas on, is that the right time to do this? I know a lot of you will be focusing on your own trading at that time. Maybe there's another time that we can do it. We're going to start with the S&Ps, but we can, possibly add different products along the way. This is an experiment, and we're looking forward to your feedback on how, if we continue to do it, if we don't continue to do it, if we expand it. I'm all for taking live trades on this. We're not promising success or failure on anything. And it's not even me making the decisions. It's you. I'm putting it on you to make Hogue money. Sounds like fun to me. We're going to try it out next Thursday. Again, I'll send a Zoom link in. Anybody is welcome. We'll pick some maybe random people to be able to talk. We'll talk through a couple of ideas, talk through a couple of trades, and you decide whether we take them. Trading research, this is happening next Thursday, is going to be the first episode. Something we're testing. We're looking for your feedback on how to make it better and how to improve on it and how to make it bigger. And you know, it's gonna be fun. All right? Let's take our deep breath. Stay humble, grateful, and creative in your trading today. Be good to yourself this weekend. Be good to others this weekend. Be kind. Say a prayer for peace, please. And get out there and profit today. That's our job here. It is not during the market forecast. It will be directly after the market forecast. We're going to try and do it at 8:25. It'll be in a Zoom room. So we'll all have influence on trying to make John money. Frozen gum wad. That is kind of a long story. We'll talk about the fretboard another day. We've got 4 minutes here before the regular trading hour equity open. Remind me, we'll talk about that another time. And have a wonderful weekend. Again, be good to yourselves, be good to each other, and say a prayer for world peace. Trade well today.